My name's Nick Sean. I'm a Forex trader and I trade a little bit of stocks and crypto. I've been trading for about almost 6 years now and I've been profitable for about 4 years. That being said, in this video, I mean it. This is truly the simplest way to trade. This is the only video you will ever need to know how to trade. The rest is a lot of practice and a lot of experience. Trading is not easy. It requires a ton of time and effort to really do consistently and predictably and profitably. But this is literally all the stuff you need to know. It's not that complicated. It's just basic market structure. I've tried all sorts of stuff. This is the stuff that has consistently worked for me for years and years. Nothing magical, nothing complex, nothing mysterious, nothing ridiculous. Just the same old stuff over and over, the same old simple stuff over and over. If you're a regular viewer here on my channel, I'd really appreciate it if you hit the like button like always. That really helps out the channel. And if you're new here, watch this video. If you find it useful at any point, hit the like button. And at the end of the video, maybe consider subscribing if you like it. I make a lot of other videos like this. Also, if you don't have time to watch this whole video all the way through right now, I understand. Just hit like the save to watch later in your playlist and come back and watch this video when you can watch it in its entirety. It is not going to help you if you just skip away from this video in the next 30 seconds to a minute from now. You need to watch this whole thing all the way through. Literally, it's all here. I'm not holding anything back. I'm not doing this or that or the whatever. I'm literally showing it all. So make sure you watch the whole video if you're going to watch it. That being said, let's go ahead and get started. I'm here on a random chart. I pulled out, what is this? ADJPY, and I've scrolled to a random area here on TradingView using the replay tool. This looks like it's August 4th, 2021. So about 6 months ago, earlier, like 6 months ago from the time of this video. So that being said, the way that I trade is I just trade within a clear trend. Within a clear trend, price just makes, for instance, a downtrend, lower lows and lower highs. And whenever price is in an uptrend, it makes higher highs and higher lows. Now, this is all contingent for time frame. To keep things simple, we're just going to be using the 1 hour time frame. That's all you need. You could be fine just trading one time frame. It's probably better if you use multiple time frames in Confluence because it helps you increase your accuracy. But if you're just getting started and you just want a simple trading system, the 1 hour time frame works great. I trade, like I scalp GBP JPY in the 5-minute time frame. I also swing trade all pairs in the daily and 4 hour time frames. The 1 hour is kind of a great in between. So now within a downtrend, price is not going to knock out the previous highs or lows. Whenever price is moving down, it'll make a lower high, and then it will make a lower low, then it will make a lower high, and then a lower low and a lower high. Same thing in an uptrend. It'll make a high, a higher low, higher high, higher low, higher high. And it'll just keep doing that over and over and over. And the moment it starts acting weird, and like for instance, if it's in a downtrend, it'll break above an area, test the previous high. Maybe it'll make a higher low and then a higher high. And then at that point, it's probably about time that this downtrend is probably at least beginning to be over, where it would be a good idea to exit any positions that you're still in if you're still short in the market. All we're doing is we're essentially trying to find a trend. We're getting into a trend that's really clear. And then we're just holding onto our positions as long as the trend makes sense. That's it. It's very simple. It's very straightforward. I'm convinced over the past few years that Forex prices and any financial markets prices are completely random. It's so hard to predict. It's so ridiculously hard to predict that the only thing you can really do is just place an entry whenever it makes sense to do so, and then hold on to that entry for as long as it makes sense that the market is continuing in your direction, whether that's up or down. I'm not convinced, because there's so many support resistance levels. There's so many different trend lines and all this crap. I'm not convinced, because you never know where something could bounce. Like it either goes up or it goes down, and you don't know where it's going to bounce. It could bounce at this support level or that one. All you need to know is that just trade with a trend. If the market is going down, just look for sells and get into the market on like a pullback like this right here, and put your stop above the previous structure point. So for instance, that would be like the lower high right there. You don't want to smother your trades, but like just keep your stop like far enough above the previous structure point. I mean, even if it goes against you a little bit and then it tests the previous high, then it comes back down, bounces at the low, then makes a lower high and then goes, that could happen. It could literally go straight into profit from where you first enter. It could just go right into profit. You just never know. Like literally, you never know. I've been doing this for years. I still don't know where price is going to go. The only reason I stay profitable is just because I do the same stuff over and over, and I make a little bit more money on my winners than I lose on my losers. That's literally it. So that being said, if we're looking at ADJPY, so it looks for the time being that price is moving downwards. So it would make sense to only look for sells logically. So what we're in right here is we were previously in a pretty strong downtrend. That's a pretty aggressive move. And then prices kind of started ranging here recently. So we're kind of ranging, still making lower highs and lower lows, but we're kind of ranging. What would make sense to do right now is to get into a sell at the current market price. Why? Because if the downtrend is going to continue, then price should be making lower lows and lower highs and it shouldn't really crack past, for in this case, this high right here. It's really hard if you're going to be super specific about all the little recent highs, like, because there's like a million different ones in there, that you want to really look at just where the last big turning point in the market was. And you want to look at it in its bigger picture, like makes a low, makes a lower high, lower lows, lower highs. You don't want to smother the trade, because let's say you get into a sell right here and your stop is above that high. Well, keep in mind, the market could pull up to where it's at right now. And as long as it doesn't break that high right there, I mean, it's still in downtrend structure. So make sure that the places that you place your stop losses are logical. Make sure that you're not going to get stopped out on a trade that could just end up working out. So with that being said, let's go ahead and try a short position right here. So a short position with a stop, we could do it, let's just do it above this high for now. So we'll put the stop above that high. It's moving downwards. We're in a downtrend. You don't even need a trend line. You could put a trend line if you want, but I mean, you don't really need to even put a trend line. You don't even really need to draw support resistance levels. All you're looking is at just the highs and the lows to see what makes sense logically to do. So in this case, let's say you have a short position, take profit. You'll hold on to the trade for however long the downtrend continues, and then a stop loss above that previous structure high. So we'll put a little arrow right here to show that's the previous high. If price gets above there, we want to be out for the time being. So price moves down. And now in the shorter term here, price is kind of like making higher lows. So in this case, and now we've just gotten this previous high taken out. So we'll see what the market does right now. So market pushes up, then it tests, so it's testing this previous high right here. Then it tests this next high, so it looks like it's testing this area right there. Then it pulls down. Then it starts pushing up like crazy fast. So in this case, what this looks like is it looks like price is still trying to channel up for the time being. So overall, while we are still like in a structure and like downtrend structure from here, it looks like with all these higher lows pushing up in here, that price might not be working out. So what we could do right here is you could say, hey, in this case, it'd probably be logical to go ahead and just exit the position, because we're making higher lows going all the way up, and you don't even really need a trend line to see that. You can just look at the chart and see there's all these higher lows. We're making higher highs. And at this point, it looks like if you're anticipating a move past this, it's probably going to happen. So let's see you close right there. That's about halfway to the stop, right? So we'll go ahead and call this was half of a stop loss. If you risked like, we'll say like 1K on this trade, you just lost $500. So price pulls down, pushes up, goes down. Now it's making lower highs right here. So the fact that price is now making lower highs means that this uptrend of higher lows is starting to end. Price is starting to shift and it's starting to move down. So what we'll do is we'll wait on a break down lower and we'll wait on a retest. So a break right there and a retest right there. And you can enter after it starts to reject. And you can honestly just enter if it goes like right there at all. So now price shouldn't be breaking that high if it's going to continue in a downtrend, right? And no matter how wide the stop loss is, just use a position size that represents only whatever risk you have. If you want this to be a $5,000 risk, use whatever lot size would be appropriate for a 68 pip stop loss. So price starts going down, it pushes up, it's still following along the downtrend, goes all the way back up to the previous range highs up here. And then it pushes all the way up and hits the stop loss. So it breaks above these previous highs. So now you're here at this zone. So now it could even be that the market's trying to go up right now. We don't really know. At this point, the market looks like it's kind of just ranging out. It's just going sideways. Okay. And keep in mind, like, I don't know what's going to happen, right? These first two trades were losses. Like, you never know what's going to happen. So now price is at this area up here. It's bouncing. Okay, so check it out. So now what price did, it came back. It should have bounced there as support to continue going up. We still know overall the market is moving downwards. We're just in a range for the moment. But price has now broken this support level. So that's a bearish sign. It's going up. It looks like it's retesting that low right there. So right now, probably a good time to get into another sell. So let's just say we took a sell here after, let's say like after that rejection right there, that first rejection. And we'll put a stop loss above this structure high because that's the previous lower high within the trend. You don't want your stops right above the zone because, I mean, this could still like push up above here. And that was the wrong tool. Price could still push above there, and then it could still come back. So I mean, you don't want to smother your trades. You want them in logical areas. And of course, you can always close trades and get out of them early if it looks like it's not going to work. So from right here, price continues down. We break the next structure point. So now what we'll do is we'll put our profit target. We don't know where it will be. We're just going to hold on to the trade as long as it makes sense. Price has now broken these lows. So let's see what happens. So it breaks these lows. It looks like it came back and tested. So right there, that's the thing with support and resistance. Don't try to be so specific with it, because you never know where the actual support resistance level is. It could be all sorts of crap. It could be at the closes of the candle. It could be at the actual wicks of the candle. You just don't know. It's best to like not try to be so specifically technical about it and just get an overall picture of like what the market's doing. That's going to benefit you a lot more than trying to be super specific and super technical. Believe me, I've tried to be super technical. I've tried to trade with stop losses that are like 2 to 5 pips before, trying to pinpoint the exact level price is going to work at. I'm not saying it can't be done. I've just been saying I've been trading for 6 years and I've been doing it 4 years profitably. It's never been anything ridiculously specific or technical. It's just been using logic and rationale and just thinking like, what do I think will happen? Holding on to trades that are good and then exiting positions that are not good. So with this being said, this is a break and retest right here. Price has broken this level. It came up and made a lower high. So now our next structure point is right here at this previous high right there. That's the previous lower high. And price had broken and retested that level. After price broke in it, retested it, and started to reject, you could have entered on the rejection right there. Again, you don't want to put your stop just on the other side of the level, because keep in mind, price could like go all the way up here, and then it could like start finding resistance along like this downtrend area, right? You don't want to be stopped out of a trade if it just ends up doing that. It wouldn't make any sense. You also don't want to put your stop loss like right there, because price could just come back and test that previous high. And as long as it doesn't break and close above it, it's fine. Like, you know, you'd still be a good trade, but in that case, you'd end up being stopped out for no reason. So in this case, we're going to put our stop just above this one. You have the first position here and you have the second position here with a stop above that. If these don't work out, you'll lose 1 unit of risk right here, and then you'll lose maybe like 30% of that position. So you're risking like 1.3 R right here, right? So this starts going down. Let's see what happens. So it's going down. So there's no reason to close any trades because price is moving down in the direction of a trend. So we're just going to hold on to these trades. There's no reason to close. Everything looks like it's still just smoking downwards. Okay, so check it out. So price broke below these lows right here, and it tested these lows, and now it's rejected. If you can see this little black candle right there, it broke, retested, rejected it. So it looks like this is going to be holding here as support. So now to figure out where our stop should be, what we're going to do is we're going to say we could enter right there, and we don't want our stop just above the level because it could still push up a little bit more. But chances are if it's going to be holding this really steady downtrend right here, it shouldn't be breaking a previous structure point. The previous high that I see is right there. Okay, so now we don't even need this stuff up here anymore. So it's all irrelevant because price is down here now. So we have the level, we have the support resistance level. Sometimes you won't even know till it rejects it, right? So it'll hit the level and then it will reject it, and then you'll know, okay, that was probably the support. So we've got our support line right there. We've got the previous high in there. We'll enter a sell. We'll have a stop just above that level. Okay. So now let's see what happens. So price ends up going slightly past it, but then it continues the downtrend, and it also knocked out the previous low right there. So now we'll keep our trades all open right here, and we'll close them as soon as it looks like price might be reversing. Okay, cool. So now we've continued going down. So it looks like we broke that low right there. We pulled back. That wasn't really a big pullback, but even then, you still could have probably taken a trade right there. Let's just say that we didn't, because that wasn't really like a big pullback. It was kind of like it barely cracked the low. This right here, this is a pretty good trade right here. So price had broken that low, came up and retested it and started to reject. So let's say you added a position right here. And for this case, you can either put your stop just above the previous high, or you can put it above this previous structure high. What I'd probably do in this case is these positions are all in profit up here, so it would probably move the stops to break even for the first two. Now you only have to worry about the risk for these two open positions, right? If you risked 1K on each, You're now open in huge profit. We'll calculate all the profit later after the trade's completed. But you do have 2 positions open at full risk right now. So for this one, let's see where you'd put the stop. Let's just say you put it like right above that previous high right there, okay? We want to put it above the high, not smothered right above it, but we want to give it room to breathe so that way in case price comes up and tests that previous high, even if it kind of pins past it a little bit, we don't want to be taken out of the trade. So yeah, and then we'll put a little arrow over the previous high. The current risk on this right here, this one, I'd probably just leave that alone. The current risk on here is you're risking 2R at the current moment, which, I mean, that's more than 1R risk, but hey, you know, if it's in a nice downtrend and everything's looking good, why not risk more on trades that are working? So in this case, price went right into profit. Okay, so now we've got a new structure level. So now we're going to be working with this previous low in here. You don't actually know which one it is. See, it could be this level up here and it could be that low in there. I mean, you don't really know until after the rejection's already occurred. It looks like it's starting to reject that. Let's see what happens. It's pushing above. That was still a blue bull candle. Now it's testing here as support. See, so now this is where stuff is starting to get weird, right? So we're still in these trades, and this is where you need to look with a little bit of logic and rationale. Now, here's a couple things that have happened. Number one, price has made a double bottom, okay? So that's that can happen within a downtrend. It's not a complete sign the trend is going to reverse, but when enough things happen that sort of indicate that a trend might be over, that's when you want to start looking to get out of positions. You don't want to get out of positions where the market could still be in a trend. So in this case, I'm going to drag this support resistance zone to right here to these previous highs. Those are the previous structure highs. Price can still come to there and test this zone. We don't want to see price push above this level and close it. So as you'll notice, I haven't said that I'm moving this stop loss to break even yet for the last position we entered, because it wouldn't make sense to move that stop loss to break even, because price could still just come and test right here and then still continue down. Like, the only reason it would be to close the trade is if it starts breaking above like that high right there. If it breaks above and closes, I'd take a 50% loss on that, close everything else, and you'll still have a huge profit. So let's see what happens. So see, this is where you have to be patient. Price would have went into a range right here, right? It even all the way came up and tested pretty much the previous highs, but it didn't break structure. Still in downtrend structure. It just kind of went sideways for a while. So as far as I'm concerned, these trades are still fine. I wouldn't add a trade, obviously, because if you're adding a trade up here, you're adding around the same entry you had. And at this point, I would move, after this breaks through that low right there, if it occurs, I don't know what'll happen, but if it breaks through this low right here, then I would move this position to break even. So now you only have 1 unit of open risk on the trade plus a bunch of trades in profit. Okay, so now we have price break below this area. Let's see if we can get a pullback. Okay, no pullback. All right, now price is forming, so there's a lower high right there. So we'll go ahead and drag our newest lower high to right there. And we'll also look at the support zone right here. So essentially, real simple. If it continues, cool. Break, maybe wait for a pullback, wait for a retest with a rejection, you can enter. If this doesn't occur, if this previous high gets taken out up here, that'll be a time to start looking to exit positions. But for now, and I would move my stop to break even on this last one as well. So now you have however many 4 positions open, everything's at break even. Okay, so here it is. So price broke this area, came in, retested, started to reject. You could enter a short position right there with a stop above this high right here. So good enough above it, just in case it comes to retest it, starts to bounce. And our next low would be right there, because now it's made a lower low. So now it comes up to retest that low, starts to reject. I didn't really see any clear rejection in here. That was still a bull candle right there. It hadn't turned bearish yet. Yeah. So I would just go ahead and hold on that first position. Plus the positions are kind of close. You want to let it really go into profit first. So it pulls back down. Let's see what happens. So now what we have is an inverted head and shoulders. So essentially, there's 2 things right here. One, price has tried to go lower, and then it came back to test, and instead of bouncing right here, it pulled all the way back to the previous high. This right here looks like it's the previous structure high. Because like this was the previous structure high, that was a lower high, we made a lower low, now this is a lower high. So price really shouldn't be breaking past this zone. So the fact that price has broken past that high right there, if we have another push up and a closure above, I'm going to say this is probably the point where we should probably get out of the trade. Why? For multiple reasons. One, we failed to continue right here. We've breached this high right here. If it does start going up, and we also would have in that case made a lower or a higher low and then a higher high. So if it continues down from here, cool, stay in the trade. If not, I would just liquidate. Yeah, so right there I would have liquidated. Right here at that high. It broke and closed above. So at that point, this trade would be, it looks like it's like a 30% loss. We'll say it's a 50% loss, right? We'll say we closed it halfway to the stop loss, right? Let's just say closed it, so this is a 50, like halfway to the stop. So now we'll drag our other positions down because we're completely getting out of the trade. And then we'll calculate how much this is. So let's see. So we had all these trades open. That one was a 50% loss. We'll see how much this is. So this was 6 units of reward. Second position was 6 units of reward. And I'll add this up on my phone so that way we don't lose track of it. So we'll do 6 plus 6. Then we'll do plus 4 plus 3.5. Plus 4 plus 3.5. So this is a total of 19.5 units of gain minus the 50% loss rate here. So this is 0.5. If you're risking like whatever 1K on this, you would have lost 500. So we have 19.5 units of profit minus 0.5 of a loss right here for when we liquidated this one. So 19.5 minus the 0.5 loss right there, you're still in plus 19R. Okay. Now I want to talk about this number here. 19R. That means if you risked 1K on each of these trades, at any given time, your worst risk would have been about, I think there was one point where we had 2 positions open with full stops and the rest were protected at break even. Your worst risk at any given time was 2K. Okay. We're also going to take in the fact these losers we had up here, right? This one was about a 50% loser. So that's 0.5R. This is like, if you're risking 1,000 per trade, this is $500. And this one was a full stop out. So we've lost 0.5 here, 0.5 here, and then 1 there. So we've lost minus 2R, right? In total, but we won 19.5. So 19.5 minus the 2R in losses gives us 17.5R in total. So this is just on one pair, just on one time frame over the course of August 4th to August 20th. So about 3 trading weeks. That's it. 3 trading weeks. You risk 1K per trade, you would have made $17.5 thousand. Okay. Now I myself, I risk about 1 to 2K for most trades. Sometimes I risk more depending on what it is. I make anywhere from 20 to 40K a month right now trading, doing the same stuff over and over. Okay. Now that wraps up this example. Let's see if we can catch another trend. If we think this trend ends, if we start seeing higher highs and higher lows, it might be a good idea to start getting into longs. And we don't know where it'll go, right? You don't know how long the trend's going to go. You don't know if it'll keep ripping up for another 300-400 pips or if it'll stop 50 pips and then come back and hit you all at a break even. You'll take plenty of break evens, you'll take plenty of partial losses, and you'll take plenty of stop outs. The point is to just find a clear direction that begins to present itself and just hang in there while the trade unfolds and then exit the trade when it looks like it's logical to do so. Pretty much when it looks like the trend's going to be over. So we'll use the same logic, but we'll just reverse it, right? In an uptrend structure, price is going to be making higher highs and higher lows, right? It's that simple. Higher highs and higher lows. If it does pull back, even if it pulls back really deep, if it's going to remain in the uptrend, it's probably not going to crack the previous low. And if it does, then it might retest that area and come down. And then if it cracks the next low, then it's probably shifting into structure. So with this, while we did exit our sells, I wouldn't say to go ahead and buy right now. I would say let's kind of wait to see if it starts creeping into an uptrend. And if so, we'll look for buys. So let's see if it continues up or if it goes back down. So this looks like it's just continuing up. So in this case, yeah, I mean, this looks like it's going to be, yeah, because now we have a uptrend structure right in here. So what we'll do is we'll drag all of our zones up in here. Not even zones, just previous highs and lows. Looks like we have a resistance right there. Looks like price kind of tapped it and continued, but then failed. Then we've got another zone right here where it's coming back. Let's see if it starts to reject this. Well, technically already did. It's pulled back. So I'll tell you what, it's pushed up, it's pulled back. It's already in a clear uptrend structure now. We have a higher high, higher low, higher high, higher low, higher high, higher low. So it's like, it's going up for now. Now we don't know how far it'll go up, but it'd be logical to get into some buys right now and to just kind of like hold on to them as long as it makes sense. So we don't want to smother the trade. We don't want to put the stop super tight. We'll put it below this next low right there, right? So we'll put it below that previous low. And this zone, I mean, there's nothing we were trading off of it, so I guess we'll just take it off. Plain and simple. If it's in an uptrend at some point, whether it's now or whether it's pulls back a little bit more and then goes, it shouldn't crack that low. So we'll put a stop like right below that low and we'll see what happens. It'll either be like a small loss or a winner or something. So yeah, so it went into profit. We made a higher high, so now we'll just drag the next level up to here and we'll see if it pulls back. It looks like it's almost pulled back to it. Yeah, okay, so that pulled back and tested and started to bounce. So in this case, we'll put a buy right there and we'll put our stop underneath these lows. So these lows would now become the new reference point. So if price gets below there, we're going to want to be out of the trade. So currently we have this trade open. We've got the stop down there. We've got this trade open with a stop just below that structure low. We're giving it some room in case it falls back to test here. But if this trend's going to continue, it should not break out of these sets of higher lows right here. It should just continue the uptrend. So we'll hold on to it and see what happens. At this point, we have, if we close that trade halfway to the stop and we have this one hit stop loss, that'll be minus 1.5 R. So if you're risking 1K per trade, you have about 1,500 at risk right now. Okay, so now it's going up. So see, it kind of did this weird shit right here. This is what I'm saying. Like, you never know when stuff like this is going to happen. Like, you just don't know. Like, it could have paused up here and ripped up. It could have pulled back there and started from where we entered. It could have pulled back even more down to that support zone and went up. You never know. That's why the whole idea is just like focus on whatever the hell the trend is and just get into a position and stay in as long as it makes sense. This one is still ripping up. So, I mean, there's no reason to close this. There's no reason to get out. If price starts going into a range and then making lower highs and lower lows, then we'll get out. But for the time being, this looks like it's still fine. We'll just drag our zones up to this up here. And I think at this point, it'd be a good idea to put the first position to break even, because now we have like our new structure point. That is the most recent low right there. So yeah. So let's see if it'll pull back to that zone. So yeah, so this is kind of weird because price made a like this is either a double top or like a lower high. We'll just call it a double top. They're pretty close together. So it made a double top, then it came back and it touched this level and it started to bounce. So this is like a break or retest with rejection. It makes logical sense to get here, an entry. And I'm going to put a stop below that low. Remember, we don't want to struggle. We don't want to smother it, because I've seen it happen many times where price will literally come like all the way down and like make a higher low there, or it will come like even lower and it'll actually touch that low or go a little bit past it. And so like you don't want to smother the trade especially when it's working. So in this case, if it now at this time, that first position's break even, it's protected. This one has the same stop, or I guess we'll move the stop to where this second one is right here. So now you have about 2R at risk, a little under 2R. So if you're risking 1K per trade, you have about $2,000 at risk for right now. But that's okay because it's in an uptrend. So it's okay to have a little bit more at risk as long as everything makes logical sense. Okay, so see, this is what I'm talking about. So now what we might be doing is we might be looking to exit our positions if this right here breaks. And if that right there breaks, then we'll be exiting. It'll be losses on these two, and it'll be a break even on the first position. So minus like 1.5R or something. So we'll see. So now it's going back up. Looks like it's back above this level. Okay, so literally that's funny. It did exactly what I said might happen. How it can come all the way back down to that low. And as long as it doesn't break it, it's still an uptrend structure. Yeah, it's a little bit weaker uptrend structure now, but still an uptrend structure. That's why you don't want to smother your trades. If you had your damn stop loss like right below that zone, you'd now be stopped out of this trade. And you'd be looking for sells. It doesn't make sense to do that unless things are clear. So we'll go ahead and keep this stop where it was at for now. And we'll see if this continues upwards. We need to get past these highs if the trend's going to continue. So it looks like it came back, tested this area, rocketed through the highs. So cool. So that worked out good so far. So as far as position management on these, I'd say, so the zone that we're going to be looking at right now, that's the new higher low. And we have a break above these highs. So now we'll wait to see if we get a pullback here to add. Okay, cool. So pullback right there. That candle wasn't really too compelling of a rejection. So let's say you entered after this bullish candle right there. I would say if you had a stop like right below that low, that would probably be a logical place to put a stop. So we'll say that's the low there. Stop loss goes below that. We have these first two positions protected. So all you really have at risk is, this is 1 unit of risk. And let's just say you close the second or this position right here. If this trade gets stopped out, that'll be like 1.2 R. So if you risk 1K per trade, you have multiple positions in profit, and you're only at risk of like a little over 1 unit of risk, 1 R. So let's see if it bounces. So yeah, it kind of went sideways there for a while. That started looking kind of weird, but didn't break out of structure. Still continued up. So now what we'll do is we'll take this zone right here. We'll drag it up to the next resistance area. And then our next lower high or higher low would be right there. I think I might use that one though, just to be safe, because we kind of had two of them forming. It's technically this one right here, but I'll be a little bit safer with it. Also, now that we have a new higher low, we can now move the third position to break even. So now these are all open and huge profit, and the trend is still continuing, and there's no sign that it's getting any weaker. So we'll just stay in the trade. So now this is the first sign that things are getting weird, right? It broke below this zone. It rejected it at first, but it broke back through. And in fact, to be honest, that looks like it was a good rejection. It fell into the zone, and then it closed with like a huge bullish wick. To be honest with you, I probably would have entered right there. So let's say you entered a buy right there with a stop below this structure low right there. So we know that, and plus this is all like a set of higher lows. Keep in mind, if the trend is going to continue, it's not going to break those lows. It's going to be fine as long as it doesn't break the lows. And if it does, you'll lose some money on these trades here, and then you'll make some money on these trades here, probably still come out on top. So at this point, the trend is still intact. You see? So you see what ended up happening is it ended up coming right in here and bouncing along, I guess, this little uptrend area in here. That's the thing. You never know where price is going to bounce. Sometimes it'll bounce at support resistance. Sometimes it'll come down to like a random Fibonacci level, even though there's like not even a zone there. Sometimes it'll come to an uptrend line. Sometimes you have like 3 freaking uptrend lines in your chart. You just don't know. What you do know is that the trend, if it's going to continue, it's not going to crack below the previous structure low or high. So that's all you need to worry about. There's no sense in trying to time it. So now this is ripping up. I mean, these are already, all of these are in a lot of profit. I don't even know how much. We'll tally up everything. This will be the last one we do. And then at the very end of this video, we'll see how much it was. But there's no reason to close. Everything's ripping up. So we're making a set of highs right here. We also have a new set of higher lows. So these are the new reference points. So we can go ahead and get rid of that. And we'll drag this one up to here to this support resistance level. This is like the little resistance where price is forming at. So yeah, price broke above, came back. It looks like it broke and retested that zone right there and continued up. I don't know. Let's just say you didn't add a position, right? Let's just say that you thought it was weird, or it didn't pull back far enough to the zone you thought it would. Let's just say you weren't able to get into a position. So that right there is this is a good one. So you drag it up. This is your next structure level. That's your new higher low. Price pulled back, tested, and it started to bounce, and that was a blue bullish candle right there. So let's say you entered like right there with your stop loss sufficiently below those lows. Because if you start cracking out of those lows, that's when shit would start getting weird. And really, in some cases, I would just probably have my stop all the way below that low, because, I mean, just look at it. It's still in an uptrend. It could still like pull back and then go up. So yeah, I mean, in this case, like, yeah, let's just say you put it like right below those lows. And that would be a good, so if you get out of this trade and it cuts you out right there, right, you still have all of these in profit, so it's fine. So we'll see if it goes. So it keeps ripping up. So it rips up like crazy. So now you have these highs right in here. You've got that high. This is getting kind of weird. Look, so we're still making higher lows, but now we're making some lower highs. So we'll have to watch this to see how it develops. So it's going up. Okay, so check this out. It rejected that high right there, and we had a quick sell-off. And we also have this zone right here. So yeah, so with where we're at right here, that's going to be the most recent structure level. This is our support resistance zone. These are these previous highs. So here's how it could play out, right? It could bounce here and continue up. Cool. That would be great. If it doesn't, it'll break below this area. It'll come and retest and start to reject. And if it does do that and starts to bounce and come down, it'd probably be a good idea to just liquidate all positions. So we'll see what happens. Let's play it forward and we'll see what happens. So now it has broken. So it's broken this structure level. So now what we have is we have a double top combined with a break of this support level. And now let's see if it starts to reject it. Yeah. So it starts to reject it. We haven't wiped out that previous structure low quite yet. So even though it's not looking good, like it's looking like this is probably going to be like the end of the trend. We've had a nice long trend. This probably looks like it's going to be it. We'll wait for price to get below that low right there, if it happens. Let's see if it holds at this level. Yeah, so in this case right here, I would cut all the positions right there. So I'd cut that one. This one is going to be, it looks like, almost to the stop loss. So about 50%, let's say it's like halfway to the stop. So let's say like 50% of the way to the stop loss. And let's see what would have ended up happening. Yeah, see, so it ends up going down. So we'll cut that one right there. So we'll call that like half of a loss, right? Half a unit of reward. And that would mean that all of these trades got closed as well at that price. So that will mean that essentially if you're going to be stopping out on that trade because you think the trend is ending, you'll just close all your other positions in huge profit. And then we'll tally up these and we'll see how much it was. Cause it's going to be a lot. And then we'll see what you got to go away with. And then we'll just do it just risking 1K per trade, right? I risk more per trade, but let's just say you risk 1K per trade. All right. So we had all of these. We had one loss right here, and then we had all of these. So let's add all these up, right? So we got 4.79 for the first one, plus 3.22, plus 2.62, plus 1.79, plus 1.77, plus 1.77. So we got 14.19 for these, minus the 50% loss for here. So we'll do 14.19 minus 0.5. So that's 13.69. So that means right here, 13.69 units of gain if you risked one unit of R for each trade. 13.69. So we'll just do like 13.7. If you risked 1K per trade, at any given time, your worst risk was probably when you had two of these earlier positions open down in here. Your worst risk would have been 2K during the entire situation, right? And all you've done is you just started to get into positions as the market began moving in a trend, and you just held the positions for as long as it made sense to do so. This is all you've done, right? Using nothing but market structure. Higher highs and higher lows create an uptrend. We look for buys. Lower highs and lower lows create a downtrend. We look for sells. Using just that knowledge alone, right? And just scaling into trades that are working and cutting trades that are not working. This is 13.7 units of gain. If you risked $1,000 for each of these trades, all the way up, you would have made $13,700 over the course of August 24th to September 8th. So about two and a half trading weeks. This is what trading is. It's simple. You win trades, you lose trades, you break even on some trades, and you just keep doing it over and over and over again. And as long as you make a little bit more on the ones you win than what you lose on the trades that you lose, everything's fine. Okay. So I wanted to make this video to show you guys how simple trading can be. You saw that all I used was just a basic, like stupidly, ridiculously simple understanding of market structure, which is just higher highs and higher lows. That's all market structure is. And used controlled risk, right? Had a hard stop for every single position, managed positions based on what was logically occurring, and then let the winners run and then cut the losses short. That's it. That's how simple trading can be. Now let's see if we were right about closing up here. Let's see if this ended up going down. Yeah. So we were right. So it ended up going down. So in this case, like I would, like if we were going to still be trading this right, like I would be looking for sells at this point. Be going down, breaking and retesting zones, making lower lows and lower highs. Yeah, I'd be looking for like sells all the way down through here. So that's it. That's trading. I wanted to make this video just to show you again how simple trading can be. If you thought this video was useful, hit the like button. If you're new here and you watched this whole video, sweet. Hit the subscribe button. I release a lot of videos like this, and I'm breaking down other stuff I've learned in my trading career. I do have a full mentorship program. Details about that are at the link in the description, so definitely check that out if getting personal one-on-one mentorship is something that you think would help you. And without further ado, I'll see you guys in the next video. Hope you guys have an amazing trading week. Cheers.